Hello, everybody, and welcome. The change of mentality of any industry is accelerated when the source of capital turns the key. That's not different in the impact ESG investing scenario. Investors have a crucial role in the investment chain, and several of them have been promoting a more sustainable agenda over the years. Local and global investors will share their perspectives and their strategies on how to select investments and monitor results with impact. And to lead this conversation, I would like to invite Cristina Penteado, Managing Director at Blue Like an Orange. Boa tarde, Cristina, é com você.
Boa tarde, good afternoon. Thank you, Cristiane, and thank you, ABVCAP, for the invitation. It's a pleasure to be here today. I will start the panel introducing the panelists that I have the pleasure to be with today. So we have Jennifer Petrini from IFC. She's Senior Investment Officer of IFC and oversees fund investments in Latin America. We have Felipe Borsato from Head of Investment Funds at BNDES. As we all know, Brazilians, BNDES is a major investor and promoter or risk capital investing in private equity, venture capital, private debt, and venture debt, and is also involved in the acceleration program called BNDES Garagem. Felipe will have a chance to talk about that too during the panel. And then thirdly, we have Thiago Stefanini from Fundação Copel, who oversees the private equity, is a private equity specialist who oversees the portfolio of Copel, which has about 12 billion reais in assets under management, and invests in private equity, infrastructure, and timberland funds for nearly 10 years now. So welcome, everybody. A pleasure to be here. Give you an opportunity to also complement the brief introduction that I just made. I'd like to start the panel perhaps with a perspective of Brazil versus LATAM, Jennifer. IFC and you specifically look into the impact space in investing in the region, Latin America. And all of us in Brazil have seen a significant, I would say, micro-revolution in at least the narrative in the ESG and impact investing in Brazil over the few years, and it's, and being also very intensified, I would say, during the pandemic. While we understand IFC and many others, including BNDES as well, has been very active in the impact, or even if what's not called necessarily impact in ESG, and has a framework that applies across countries, would be interesting to see what's your perspective about what's the environment like in Brazil, and what changes have you seen or are you noticing in the impact ESG environment investment community in Brazil?
Okay, thank you so much for the introduction. It's a pleasure to see everybody on the panel and participate in this session. Thank you, ABVCAP, for the invitation. So I think first and foremost, just thinking about our point of departure at IFC and how we think about and we look at the concept of impact and investing for impact. IFC has always been and always will be an impact investor. This is core to our DNA, who we are, and what we do. And I would say we've been doing impact investing before impact investing really was a thing. We are evolving our views on impact, especially with regards to how we measure impact. Now, IFC is a really large organization. We do a lot of direct lending, a lot of direct investing. I oversee our investments in our funds program. So we have different ways of measuring and tools for measuring impact for all of the different products that we use, but we use a particular kind of scoring mechanism that we call AIMM to measure the impact of our fund investments. And we look at it, we try and make some estimations before we fund our investment, and then over the whole life of the investment, we monitor that. And everything, of course, is at the portfolio company level. In some ways, we measure some market metrics, meaning how we always want to try and be crowding in investors where we are investing ourselves. So if we can see that there's momentum building in markets and maybe we're having some kind of signaling effect, we'll measure the size of markets and how they've grown over the life of our investment in a fund. But we're mostly looking at the project level. And so how are investee companies really making changes on the ground, making impacts in the lives of the people who they're affecting. And a lot of that is through job creation. So that's really one of the principal metrics that we look at in terms of how we measure impact. You know, are we creating jobs, sustainable jobs, making contributions to overall levels of productivity? So that's how we look at it internally. And I need to answer some of your questions about the Brazilian context in particular. We have observed over the last couple of years, there have been a lot more impact funds that are being raised. So, you know, we see a lot, we get pitched a lot for all funds that are out there, and I do observe an increase in the amount of impact funds that are being raised. I think for somebody like ourselves, again, who we've always been investing for impact, one thing we're really mindful of is what we kind of call impact washing. So people who are claiming to be investing for impact, but then when you really dig in and you take a closer look at how they're thinking about impact and how they're measuring impact, it's very, you know, it's quite thin. So that's something we're always mindful of, and you know, this goes for our global investment program and not just for investing in Brazil. But we have observed an increase in the amount of impact funds that we've seen marketed in Brazil.
Thank you very much, Jennifer. Maybe Felipe, you can also comment from BNDES perspective. How have you seen the emphasis, so to speak, for the growth of both ESG funds as well as impact? I mean, there are different categories, and if there are different categories that you see this way at BNDES, how do you differentiate, or do you have a specific agenda or an allocation for different types of funds with different types of profiles within the spectrum from ESG towards impact?
Okay. Well, first of all, I'd like to thank ABVCAP for the invitation. I'd like to also say that it's a pleasure to be here in the panel with Jennifer, Christina, Thiago. Well, it's a good question, actually. As Jennifer said, we are an impact investor. All development banks should be impact investors. And we try to and maybe before it's important to say, we are seeing a much higher awareness of the ESG agenda and the impact agenda in Brazil in the last months. Maybe due to the pandemic, maybe due to a global new perspective. I believe that there are several motivations. Society demanding higher impact and better investments. So I believe that society is a big force of pushing this agenda, And telling about the differentiation between levels of ESG or levels of impact, what we do is that, first of all, we have a negative screening. So we don't invest in funds that don't commit to high standards of governance, for example, and even high standards of respect to environmental issues or to social questions, especially related to the quality of job, as Jennifer said as well. And that's the first way of seeing things. Then we have I would say a positive screening. So we, for the past 4 to 5 years, we have been using some classification criterions related to ESG indicators during our manager GP selection. So I would say that we also use, first of all, a negative screening, then we use also a positive screening, and we try to invest in, I would say, best in class. And apologize about that. And after that, we also try to push the managers and the funds to look deeper in the ESG space. They try to foster them to look deeper in their indicators and their KPIs, and we also negotiate that in our bylaws or agreements and also in our investment agreements. We try to negotiate that. And to end the answer, I would say also that we differentiate impact from ESG funds for us, and I guess other panels touched this point. We also differentiate because for us, impact demands intentionality. So for us, it's quite important to have intentionality in impact funds. And for us, it's a bit different asset class. They should have the market returns as well, but we are much stricter. We demand much more information to invest in impact investment funds. And of course, we can maybe go to take bigger stakes to foster this kind of asset class in Brazil.
Thank you very much, Felipe. Thiago, in your perspective from Fundação Copel, how do you assess today, and how do you take that into consideration for your selection of funds? The spectrum from ESG or impact, is that something that you also have then as a specific screening process or classification that you will use in allocating your fund portfolio?
Sure, Cristina. Well, first of all, I would like to thank ABVCAP also for the invitation and for opening this space for discussion. Actually, it's a pleasure to me to share this meeting with such relevant professionals as Jennifer and Felipe. But for a question, I believe that regarding ESG, taking first the G ladder, the governance aspect of investment, this is for sure a fundamental theme for us in our analysis process. This is something that we value a lot. I believe that governance is a factor naturally linked to private equity. So it's actually one of the key aspects that we see over our due diligence process. And I believe that this is something that our GPs or the GPs that we already invested have developed pretty well in their thesis. And as you mentioned at the start of the presentation, we have invested in some sectors inside this private equity program. So considering infrastructure, private equity, timberland investment, our main idea when we invest or when we select a fund or a thesis, a GP, we like to base our decisions over mature structures or mature thesis. So I think this is an aspect linked to a pension fund view. We are not a big pension fund in Brazil. I don't think we have the mission to lead the industry over new waves, new ideas. But so over this aspect, what we don't do, we don't sponsor new theses or we don't sponsor first-time funds. We really have a more conservative view, as Jennifer was telling before, that aspect over greenwashing and things like this. We like to put our feet on the ground and don't get so involved or so amazed by some theses that we happen to see during time. So we like to stand out constancy of the GPs, and what we have seen during this, especially this last 2 or 3 years, is an increase of these ESG aspects, layers being involved in even traditional private equity offers funds. So even considering the GPs that we already invest, we have seen some initiatives. There's the intention to bring out ESG layers over the traditional principles. So considering some things that I have in my portfolio, I have funds that holds ESG compliance teams, for example. So over infrastructure thesis, the GP bring out a compliance team to really look over how they're doing the investment and how they are following some premises. We have seen some managers becoming PRI signatories. So I think this is an important outcome of the industry. And so in general aspect, even not investing or even not have invested at this moment in ESG labeled products or impact funds directly, we have seen these procedures coming over the strategies that we already invest, and we value this for sure. I think that especially as the discussion over ESG increases, and we see that you have a wave of culture, all the stakeholders over our market are really strengthening the discussion day after day. So I can say that not having this ESG layers perhaps over the investment can be even a risky situation that maybe at the time of pursuing liquidity of some asset or a holding of a fund, there's a risk that the market will somehow penalize that asset or something like that. So yeah, I think this is the way, even being conservative and searching for more mature theses, we have to value this perspective, and we have already seen some of them happening in our portfolio.
Thank you very much, Felipe. Looking forward, I mean, we know the agenda and the impact and perspective, it's an ever-evolving agenda, and society, evolves, the investment environment evolves, culture evolves, and the companies evolve alongside and respond to, the stakeholders and also the demands of many different, angles. So, in your perspective, Jennifer, what do you see are, major expectations or changes or things that you're looking forward, you expect to see in the impact agenda going forward as an LP in the funds you invest in from IFC?
Yeah, so I mean, it's interesting thinking about how some of these concepts have evolved over the years, with maybe the beginning of the impact agenda was perhaps more oriented to just ESG, whereas it has already grown to include thinking about, climate. It's grown to think about what are the effects on the ground of, these investments that we're making? What are the effects on the overall market? So I think it's interesting to think about, it really, the whole agenda itself, you're right, really has evolved over the years. And I would say when we first began, when I first began at IFC about 10 years ago, we would identify that there was still a little bit of resistance from some fund managers to take on IFC's environmental and social policies. They were considered onerous. They were considered time-consuming. We even have a few cases a decade or so ago where some fund managers said, we don't want to take money from the IFC because we think, your ENS management is just too much for us and we don't want to sign up to that. But in today's environment, there's hardly any resistance at all. If a fund manager turned down money from any investor because of their environmental and social requirements, I'm pretty sure that it would set off alarm bells with any other investors who are thinking about investing in that fund. So, I think that ENS has become part of a core kind of component of risk management within a fund. If you're selling your local company to a large international corporate, they're not going to want to take on any legacy environmental and social issues that the company might have. They're going to want to know everything is all in order. If you can prove that you've been monitoring, tracking on top of it on a yearly basis, it's a better business practice, it's better risk management, and it's ultimately accretive to your business. So, it's almost that ENS component has fallen into a risk management bucket. And so what does that mean? And I think, as the ENS part has become much more core, the other things that we're measuring in terms of impact, that will also continue to grow, and this will also continue to be a core part of our business. I often hear a lot of fund managers saying we ultimately want to measure, like, are the investments that we're making, are we doing good? Are we doing the right thing? Are we creating jobs? Are we creating opportunities? Are we increasing productivity in our country? So, it's already on the agenda because people are thinking about it, and I think to Felipe and Tiago's comments, it's up to us as investors to help force some of those measurement tools, I think, so we can avoid sort of the concept of the impact washing and really hold them accountable for what they're saying that they're going to do.
It's quite interesting to see, as you mentioned, Jennifer, that not a long time ago, some maybe fund managers would say, your money is too cumbersome to take, right? It would be too many things to report and to conform. And, how has this has changed overall, at least, the mentality has changed. Maybe not all of them are at the same level in terms of, being complying with, but it's certainly something, a kind of a narrative that doesn't really have a place anymore as much as, perhaps you would expect, a few years back. It's interesting to see, and I'd like to build on what you mentioned, just to see whether you do have a relationship in which now you see fund managers kind of wanted, not specifically guidance from IFC on that agenda of impact and supporting them going further, not only with the capital per se, which obviously is part of the equation as a fund and LP, but, in the relationship of a fund manager and LP, it's, it can, extend beyond the capital. And do you see the kind of dynamics from your fund managers to, looking up at IFC as not a mentor, but as a reference as well as they progress the agenda further on impact?
Yeah, and this is something that we think a lot about internally as well. We always want to be able to bring something to this industry, to this business line that we have, and think about growing it in a sustainable and impactful way. And as part of that, we have created the operating principles for impact management that fund managers, asset managers can sign up for. And again, it's it's really that creating sort of the commitment for measurable impact. And so we are always thinking about how this agenda evolves, and this is really one of the more recent tools that we've put together.
Quite interesting, Felipe. I think, BNDES and locally that has also that kind of a position within the investor community and the fund managers to be, an aggregator, right? And a catalytic investor within the, fund manager community in terms of, directing, specific, teams as well and, driving, measurable impact. Now, interesting to see also your perspective from BNDES, how you see the relationship with the fund managers and how much of an active role in developing further the agenda beyond what's being offered, so to speak, at that moment from the fund manager, you see BNDES taking a position on.
Well, first of all, it turns off all the phones. It's easier to answer this way. That's a good question also. And actually, as a development bank and an investor that wants to foster and push managers to avoid ESG washing or impact washing, and to foster the industry to have better KPIs, we try to do several different things. First of all, we try to foster both companies and how do you use good KPIs to analyze companies, but also how can we strengthening the intermediary, the managers of the country to be better. So I believe that we have two main challenges. And we can invest in some specific theses. So, okay, we may decide that renewable energies is quite important. So we can invest in some theses. And, of course, managers will try to make the best KPIs for this thesis. And we can also invest in some kind of asset classes, as I said, impact investing, for example. So we can be an anchor investor and try to foster those managers to have the state-of-the-art monitoring and evaluation. We also have inside BNDES, we have a team of monitoring and evaluation. So we work hand in hand with this team. We as fund investors, we are like the front office, but we have our middle and back office inside BNDES to help us with data scientists to help us analyze the impact of our investments and of our efforts. So I believe that we can work in several dimensions. But if I may go a bit beyond your question, I believe that it's important to say as well that there are some challenges in this market for the ESG market to grow. I believe that governance is something that we have been seeing for a while now. But the E and S, especially the environmental and social issues, I believe that we are beginning to look at this more in depth now. So we have been seeing, and the last panel was very interesting, we have been seeing some affirmative policies in the companies. That's quite interesting to see regarding both social and environmental issues. So we have lots of space to grow in the E&S agenda specifically. And we have some challenges as well. I would say some of the challenges that I believe that are important to say. But I believe that we need more independent companies assessing and certifying both invested companies and financial products. That's quite important as well to avoid this kind of ESG washing, for example. I believe that and as an investor, we are trying to build a track records of impact investing and ESG investing. The most recent data shows that have a good stewardship when you have a positive screening, when you have an ESG risk management, you have better returns. But it's important to build these track records. So I guess that we have a lot of different dimensions to work on and to help the market.
That's so true, Felipe. We see that as well. I mean, there's total positive correlation between performance and development outcomes of investments. So, I mean, in our view and our track record of investing in funds, we really find that they are so linked.
Thank you very much, Jennifer and Felipe. It's interesting to see as well as we think about, the agenda of impact and how you measure impact and, keep your fund managers also in check and what they said they would do and how they report what they're doing. Do you think, and then Tiago, I would like to hear about your pension years, if this is something that you see more of a concern from that perspective, right? Whether they think about, where I want the money that goes into funds, not only obviously try sound financial returns, but also have a clear intentionality and positive impact. Is this something that you see that is a trend or a demand growing in your, so to speak, clientele? Tiago?
Sure. Well, as I was saying before, our view regarding private equity investment really takes into consideration this major aspect of GPs. So what we like to see, even and then here I'm considering not specifically ESG teamed funds, impact funds, but I think this is this can relate also to this type of investment. We really like to see, as you were saying, we like to see when GPs really stick to the plan, stick to the pitch they offered us at our discussions and even during our diligence process. So I think applying the same vision over ESG opportunities, I think you can have positive outcomes out of it. Selecting the serious people, serious teams. They're really interested not only in raising the fund, but consuming that capital to apply on that specific thesis. And I think that if this happens, the outcomes will be obviously linked to the thesis. So you have positive outcomes. And in our view, as we have not invested up to this moment in ESG impact, for example, what I can say is that many of our GPs, many of our portfolio companies have the ESG senses, even when you consider the sectors that they are investing in. So we have many assets over education sector, health sector, financial technology, in the perspective of opening up space to people that didn't have a bank account, didn't have a card, or things like that. So obviously Brazil lacks investment in so many areas and so many types of economic trends and views, that even not investing, or maybe this is even this growing concern over ESG, that it's bringing this layer over the traditional GPs. So I don't need, at least at this time, I didn't need to invest in an impact fund, specifically impact fund, to generate social environment impacts with my portfolio. We have many big platforms employing so many people, and as I was telling, investing in these segments that Brazil really lacks investment. So I think this is the view I can bring.
Thank you all. We have just a few minutes left. One thing that I'd like to touch on before we close is how do you see the financial incentive or penalties to fund managers related to impact goals and outcomes within the implementation in the portfolio they build and what they told they would do? Is this something that you already have in your potential fund, allocation today. Some of the fund managers who have specific links in the financial performance related to the impact or the ESG, component, or if not, do you see this something that you will probably have in the future? Maybe we can start with, Felipe and then Jennifer.
Okay, I'll try to answer fast. We like to see skin in the game. So for us, it's interesting to see that you have some ESG related or some impact related KPI, and that's correlated with the return, the financial return of the manager, the GP. But saying that, we don't try to have lots of penalties. Maybe in our investment policy, we have this negative screening, things that you can do. So if you do that, you can have some penalty, but it's not so strict. But we like to see skin in the game, so we'd like to see in a positive way. We'd like to see our returns somehow related to the achievement of certain KPIs.
What about you, Jennifer, at IFC? Is it something that you already have in your portfolio, you intend to implement going forward with fund managers?
So, IFC has a really high standard on the ESG, on the E&S side, and then we also have a separate kind of column for governance. But it's at the core of our business, and it's really not optional, and it's really one of our core operational requirements from our board. And when we give money to third parties to manage on our behalf, we have, tools and resources available to help you build up a pretty robust environmental and social, what we call a management system. We also have the negative screening, like Felipe does at BNDES. We call it an exclusion list. It's excluded activities, manufacturing of weapons, use of child labor. I mean, really negative impact activities. And then, it's baked into the legal agreements that we have that the fund manager will have to comply with our environmental and social standards and report to us on an annual basis. There are a lot of mechanisms if you fall out of compliance, and, we have a lot of remedial things that we can do to try and get things back in order. But if ultimately you still can't get it all back into order in a way that is satisfactory to our environmental and social department, we have a stop funding right. So there's a carrot and there's a stick. I mean, there's a carrot in that we have tools, we have resources, I am not an environmental and social officer. We have a dedicated team of people who have degrees in environmental engineering who are far more qualified to help manage and assess those risks than I am. And we make all those resources available to you. And but if ultimately you're not into compliance, that's where the stick comes out, and we have to ultimately be able to remedy. Now, on the impact side, we ask you to provide us on an annual basis a few metrics that we're tracking. A lot of those are related to, number of jobs that are created at the portfolio company level and those things that we spoke about earlier. That's really for our internal consumption, and we're also, it's also good for the fund manager too, because then they can use it for their own impact monitoring, but we don't require that you meet a certain amount of KPI in terms of the impact that you're having. Not yet, at least.
Thank you. Thiago, I know you don't have necessarily an agenda formally in the ESG impact as a necessarily screening process at the moment, but when you look into your performance of your fund managers, obviously financial return is a clear metric that you can compare. Are you starting to take into account other things related to ESG and impact in your assessment of the fund manager performance?
Sure. Well, as our portfolio is not that big. At the present time, we have 14 funds invested, 15 committed. Our daily basis of being together with GPs, we used to be very close to them. So we really like to see on a daily basis how they are bringing out their work, how they are proceeding with the investments. And so not only we take in the aspect of return as an important point, but all the alignments between the professionals of the teams, and as we were saying, how they deviate or not from their thesis, things like this. So I believe that for sure we should reward GPs that don't deviate from, especially from their initial pitch or from their initial thesis. And in my case, the reward would be probably a new commitment. But yeah, I don't apply this type of incentives or penalties yet. Probably something that we should evolve during the years. But I think this is the type of actions that will probably develop the industry. So I still see a maturity path to happen, and IFC and BNDES having these tools for sure help even us when we are selecting the natural winners of this concept.
Thank you all for your participation. I guess we are out of time, I had so many more questions and so many more things I'd like to discuss, but I think it was a very good comprehensive view of not only where we are today, but where things are moving forward, and how impact in ESG is becoming something that is day to day, is not something that is so out of ordinary in a way that it's you explain as if it's something new or something that you're doing different. I think managers and you as the selector managers, you create a portfolio of fund managers that serves many purposes, and the more diversity as well we have within the fund managers in the way they approach ESG and impact, it does create a richer environment for the agenda overall. So all of you have a very important role, a critical role to push forward. And then thank you very much for your participation, and thank you again for ABVCAP for the invitation.
Thank you.
Thank you.
Thank you, everyone.
Obrigado, Cristina, pela ótima conversa. E eu também gostaria de agradecer a Jennifer, Thiago, Felipe pelo seu tempo e sua participação. Essa foi a última sessão do Fórum de Investimento Sustentável. Muito obrigado a todos os palestrantes de hoje e a nossos patrocinadores, FM e The Hike. Obrigado a todos que se conectaram conosco até o fim. Eu vou mudar para português, desculpa a todos. And I hope that you all have enjoyed the content that we have presented. We remind you that, Thiago, that we're always open, that our platform does offer you networking possibilities. There are over 550 members signed up, so do take advantage of this opportunity to connect. The platform will be available until the 4th of June. The content that we presented this week will be available on the platform after the 31st of May. Thank you for taking part in the meeting. I hope you all are healthy, and see you next time.